Traders, before you take your next trade, watch this video till the end. In this video, I'm going to be talking about how I failed at trading until I finally understood this one specific concept. And after I did, I was literally instantly profitable because it's such a basic thing to do and it's such a logical thing to do that most people are missing. We're going to talk about it in this video. I'm going to teach you guys how to apply it before you take your next trade. Let's begin. Let's waste no time. So before that, here are some of my broker statements. This is the first year I started trading, and this is the second year I started trading. 13K to 480K and then 480K to 1.2 million. My results aren't typical, but that doesn't mean you shouldn't try. So let's go through the agenda for today's video. The first thing we'll talk about is the big mistake I made. Then we'll go through my exact strategy from A to Z, everything you need to know. Then I'll talk about a real 2,687 trade example. I'll show you when I bought, when I sold. I'll show you an actual trade. And then we'll talk about how you can copy this exact thing for yourself. So before that, obviously, quick heads up, this is not financial advice. Always do your own financial research before trading. So the first thing we're going to talk about is the big mistake that I made. This kept me unprofitable for so long, so let's begin. So in front of you, you can see a trade that I made, like this was like years ago. You can see I entered right over here for some whatever stupid reason, whatever strategy I had at the time. And the stock went down and down and down and down, and I eventually decided to sell over here. I had zero strategy. I had no edge. I didn't even know what a confirmation was. I just FOMO'd into the trade. I was like, listen, the stock went up from here all the way till here. It's gonna keep going higher. Let me buy. And that's when I bought, and it was just stupid. In this one, I lost $3,500 from this specific trade. I lost like 20%. But this is the reality. This is what I see a lot of beginners doing. They don't know what they're doing. They just see a stock, they see it slowly starting to go up, and they're like, okay, if it's up this much, it's gonna go up even more. So I'm gonna buy right over here. And that exact moment that they buy is when the stock goes down. And then they start saying, whenever I buy stocks, they go down. And whenever I sell them, they go up. It's because they have no strategy. And that's what I did. I had no strategy. I just saw a stock going up. I said, maybe we'll buy it. Maybe we make money. Maybe we don't make money. Maybe we see. Maybe. It was terrible. You need to formula. It needs to think about it like math, like logic, right? It's just all math. Like if you can have a strategy that makes money long term, it's impossible for you to not be a profitable trader. Back then, I had no strategy. So what's the solution? Obviously, we've talked about you need a strategy, you need math, all this stuff. What's the solution? So I present to you support and resistance. Now, before you click off the video and say, oh, I've already heard of this before, give me 2 seconds. Support and resistance is like fundamental stuff. This is like the most basic stuff, and it works every single day. It works every single second. Like support and resistance is being used every single second. And this is exactly what it is. You see over here the price, right? It's going up and it goes down. It goes to this level, and for some reason, buyers start buying. A lot of people start buying, it pushes the price up. Then the price decides to go back down to the same level, and people continue to buy. So it goes up again. Then it goes down for the last time. People continue to buy, and it goes up. This blue line over here is like confirm a support level, because anytime the price dips down to this level, it goes back up. It dips down again, it goes back up. This level over here is what we call support. This is like fundamental stuff. When you're buying a stock that's just going up and up and up, you're not buying at support, you're buying at all-time highs. That's what you're doing. Now let's talk about resistance. Resistance is the exact opposite. If we have a stock and it's doing this and this and this and this and this is support, and that one on top is what we call resistance. This is where whenever the stock price hits, people start selling. It hits it, people start selling. It hits it, people start selling. This is what resistance is, and this is what support is. If you can understand these two things, you're literally good to go. Because you can apply this to any strategy you have, no matter what your strategy is. You're trading bull flags, you're trading, dip trades, you're trading breakout trades, whatever it is. You can apply support and resistance because it's so fundamental. And in the next few slides, I'm going to explain how I use support and resistance for my strategy. This is how I make a living. Before we go through with that, I have a free trading course. It's completely free. It's the first link in the description. It includes a section on what are gappers, they have entry, exit, live trade. There's a bonus inside as well. The first link in the description, go check it out. It's literally free. So now we'll talk about my exact strategy. So I've told you about how important support and resistance are. Now we're going to apply it to my strategy. Because once I changed this, once I tweaked this little thing in my strategy, I became profitable. Because now I knew what I was doing. Now there was logic behind my trades. Before, I just traded however I felt like it, like I showed you. But now there's logic to it. And this is a section of what we do. This is like a cross section of what we do. All we need to see is we need to see price go up, hit a certain point. This we'll call this point, right? And then it finds resistance. All right. Then it goes down and it goes back up. So this will be classed as resistance because anytime price goes to this price, people start selling, aka price goes down. Then the price goes down, and then we see right about this level, people start buying again. This line over here will be called support, like we just learned. Then price goes up again. It breaks through previous resistance. This line used to be resistance, but now it's support. Because what happens is the stock goes up, goes back down, and when it hits this price again, people, instead of selling it, they start buying it. And because they start buying it, the price goes up, right? And this would obviously be classed as resistance. Now, if the price decides to go back down to this level and people start buying back up, this line over here will be called support. That is the whole idea. So all we need to do is we need to find stocks every single day, figure out what the support level is, wait for the price. So we figured out like the support level is going to be over here, this line. We're going to wait for the price to go near that support level. And when we can confirm that yes, buyers are stepping in, we want to enter right over there. Price goes up, we want to sell, and we want to do this every single day. Keep it simple. And these on the right are just some wins from the community. This is people, it's proving that it works because it's super simple. It's basic stuff. I'm not reinventing the wheel. So now I'll show you some specific trades of this strategy working because like I said, it's really simple. This is what I do every single day. We can see I've identified support will be somewhere roughly around over here. And you can see the price goes down, hits the support level. I notice that buyers are stepping in. I'm like, this is perfect. I'm going to enter. I enter right over there. Price surges higher in a couple of minutes, 2, 3, 4, 5 minutes, that's it. And when it touches this point over here, which we'll talk about later, called VWAP, that's when I sell. Boom. Simple entry, in and out, 5 minutes, I'm up a couple $1,000s. Same thing over here. I would have noticed that the support is going to be around about this level. I wait for the price to come down. That's when I enter, perfect on support. Price goes up, hits VWAP, I sell, boom. Same thing over here. I noticed that the support level was going to be around about 150. I remember the trade. It was 150. What happened was price went down. It's not close to my support. You can see there's a big gap. I'm not going to buy it. It goes up, it goes down, touches my support level almost perfectly. That's when I enter. Price surges higher and I sell. This is what I do every single day. This is what I teach in the community. This is what we do every single day. So the first thing I'm going to go over is what are the types of stocks that I'm buying? Because this is one of the most common questions I get. Because people think I'm buying like massive companies, like Apple is the one I'm buying. People think I'm buying Nvidia. People think I'm buying Meta. People think I'm buying all these companies. I'm not buying these companies. The main reason I don't do it is for a couple of reasons. Well, actually, the first reason is a high market cap. And the second reason is a high float. The problem with these massive companies is Nvidia and Microsoft, the chance of them, the stock going up like 10% in a day is almost 0%. Unless some crazy news happens, there's like explosions and something happens, they're not gonna go up 10%. The maximum Nvidia and Apple are gonna go up in a day, maybe like 2%, maybe 5%. So I'm not trading these stocks because they don't go up enough to make me money. I wanna trade the stocks that have the possibility to go up 100%, 200, 500% in a day. Because if this is a 500% move, if I can just capture a tiny bit of it, just this much, that can be enough for me. Because that can be, let's say 10%, maybe that can be 20%, maybe that can be 15%. This tiny move is just enough for me. If I can repeat this every single day, you can literally make a living. So the stocks that we want to look for cannot be like Apple or Nvidia. They cannot be high market cap, they cannot be high float, they cannot be any of this. We need to trade stocks that are small float, like it says over here, and small cap. These are going to be companies that you haven't even heard of. You're going to think of Apple and Nvidia, you're going to hear about them. You're never going to have heard of half these companies because they're so small. But these are the companies that have the ability to literally double in a day, to triple in a day, to quadruple in a day. And again, all you need is a tiny bit of that slice to make money. So we'll talk about it, right? The one word we can call all these companies are gappers. Now gappers is this. If you look at the chart on the right, you can see a daily chart. And you can see the stock is slowly going down. One day it's here, the next day it's here, and down, 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 down. Then one day, let's look closely at this. What happens, right? One day, the stock closes at this level over here. The next day, it opens all the way up over here. Now you might ask yourself, why did this happen, right? The past few days, it opened and closed like very near each other. We can see a very clear trend. So why suddenly did this just ramp up randomly to the top? Why did that happen? Well, there's a couple of reasons. The first and most common reason is because the company released some news. Maybe they had this drug that they were working on and it solved cancer. So they announce it to the public. They release a news source and it says, listen, we were working on a pill that would solve cancer and it worked. There's a 100% success rate and we're going to release it to the public. When the public hears this, they're going to lose their minds because they're going to be like, holy crap, this company's going to make $1 million. They're going to make $1 billion. And everybody starts buying up overnight. And so tomorrow morning when the stock opens, it opens up way higher. That's what a gapper is. And the reason we trade these stocks is because it's literally doubled overnight. Most of these stocks go up like 100% overnight. And this happens every single day. Believe it or not, this happens every single day. This is not like a once in a week type of thing. This is an everyday thing. Every day you will find stocks that literally double overnight, that go up triple, that go up 4 times. You will find that every single day. And again, all we need, I keep reminding you because it's super simple. We just need to find a small bit of that gain and we're good to go. This does not apply to Forex. It doesn't apply to futures or options or gold or any of this stuff because gapping is not a concept there, right? Gold is not going to gap up to 50% overnight. It's just never going to happen, right? The same with Forex, the same with like futures. It's not going to happen. But with these small cap, small float stocks, it literally happens every single day. And those are the only stocks that I trade. I don't trade Apple, Nvidia, none of that stuff. So now we're going to go through step by step. There's 4 steps in front of you. I'm going to reveal them one by one and we're going to go through them step by step. I'm not going to use any fancy big words or any of this crap. Most people use big words to sound smart and to look cool. I don't care if I sound smart or not. I literally don't care. I'm a normal guy, so I'm going to use normal words. So let's begin with step number 1. Now, step number 1 is we need to find the gappers in the first place, right? Where do you find these gappers? Very good question. I'll tell you exactly how. You look at a stock screener. This is going to be like the most important thing in this whole thing because if you cannot find the gappers, it doesn't matter what stock you trade. You need to find gappers. So a stock screener is a thing which you can literally get every single stock in the stock market down in a list and you can sort it by whatever you want. You want to sort it by the ones with the highest price. You want to sort it by the ones with the cheapest price. You want to sort it by the ones with the highest gap. That's what we want. And if you click that gap thing, it will sort the entire list by the highest gappers. That's what we need to do. The one I personally use is TradingView. You can use it as well. It's completely free. You don't have to pay for it. And the main thing you want to consider is you want to sort it by gap percentage. Now, I've found through years of trading the strategy that if a stock is gapping less than 20%, meaning it's gone up less than like 20% overnight, we're not going to be trading that stuff. We need to find the stocks that have gone up more than 20% because they are going to be the ones that have enough momentum. If a stock is gapping up 3 or 4%, no one's watching it. It likely has no volume. If a stock has gone up 400% overnight, like one did today, you bet yourself that it's going to have volume. You bet it because everybody's going to be watching it. Everybody's going to be trading it. Everyone's going to try to scalp it. We need to find the ones that are more than 20% because they have enough volume. They have enough momentum, enough volatility for us to just go in, get out with a small profit, right? So this is what the TradingView scanner looks like. It's extremely simple. Like I said, you have all of the stocks over here on the left and you can sort it by whatever you want. I've sorted it, like I mentioned, by gap percentage, and I've chosen a minimum of 20%. So we can see on this specific day, there were 5 stocks that were gapping above 20%. That's pretty good. So like, okay, so we have to figure out which one of these 5 stocks we're going to be trading. So all of these 5 stocks, like I mentioned, this happens every single day. All of these 5 stocks had a reason to go up. They had some news come out, maybe they had some momentum, maybe there was news in the industry, maybe something. All these stocks had a reason to go up. The next step, because we're not going to be trading all 5 of the stocks, are we? The next step is to watch list. All watch listing means is we're going to take these 5 stocks and we're going to figure out, okay, this one, it is gapping up, but I don't like the volume. There's not enough volume, so we're not going to consider that. This one, the market cap is too high. Remember we said not to trade high market cap stocks, so we're not going to trade this. This one, the float's too high. This one, there's another problem. So you know what? I'm going to trade this one exactly because it ticks all my boxes. I like it the most. This is going to be the stock that I'm going to trade. That's all watch listing is. And you can see I've listed it with the red thing over here, with this red flag, which visually tells me that that is the one stock I'm going to be watching that day. Let's talk about watch listing, right? How do we watch list? A couple of things you can keep in mind is this. The first thing is high volume. High volume is extremely important. We need to be able to get in and out of the stock as quickly as possible. And high volume is going to allow that. If you're trading stocks with barely any volume, nothing's moving and the stock's kind of moving, you're never going to get in and out quick. You're never going to make money. If you trade stocks with a lot of volume, there's movements up and down, whatever, you're instantly going to be able to get in and out quickly, capture that little move, you're good to go. The next thing, like I mentioned, is we need to find a small float as well. You can look at some of these stocks and you might realize, you know what, maybe this one, the float is too big. You know, maybe there's 1 billion shares of a float. We don't need that. We need stocks with a minimum, or not minimum, but maximum 20 million, right? So maybe this one has, the float is too big. Maybe this one's float's too big. So automatically, we're just not going to consider them. We're only going to consider the ones low float, low market cap, and high volume. And the last thing we need to consider is the support level. This is what this whole video is about. After I started including this support level into my trading, I literally became profitable overnight. I can't even say it in any other words. That's how simple it was. So let's look at an example. On this stock, we can see this is the pre-market chart. So the news came out right over here, right at this instant. The news came out and the stock started going crazy. As soon as the news came out, you can see the stock started going up and up and up and up and up and up. Now for me personally, this is a minute before the market opens. For me personally, this line that I've drawn, to me, is what I call support. You can see that the stock was going up, hit this line, and it started going back down. So this would be classed as a resistance point. Then what happened was the stock eventually curled back up, it touched the line again, and it found resistance. It was trying to break above this line. It tried. It couldn't get it. It went back down. And then it tried for one last time to go above, and this time it succeeded. It did go above, and the best thing it did was it retested this zone. So you can see on this red candle what happened was stock went down, it was good, it found support, and it continued going back up. This is perfect. This is as clear to me as it can get that this point is support. This line over here that I've drawn is all support. And so all I need to do now, because this is 1 minute before the market opens, is I need to wait for this stock to make its way down to my support line, which is going to be like this. Make its way down. I will buy over here, wait for it to go back up, sell. That's the whole idea. This is the strategy that I do every single day. And it's the most simple strategy, and it works because it's logical. It makes sense. So now let's talk about buying, right? I already covered a little bit of it, but let's go through it. So we're going to be buying when the stock confirms support. I've underlined it for a reason. When it confirms support. What a lot of people do is they see a stock that's gapping up, right? And let's say this line over here is when the market is going to eventually open. What people end up doing is they end up buying as soon as the stock opens. You never want to do that because you do not know what's going to happen to the stock. The stock could eventually go up, right? But it could also go sideways or it could also go down. You don't know what's going to happen. So at that point, all you're doing by buying right over here at market open is just gambling, effectively. What you need to do is you need to wait until the stock gets near your support level, which in this case, it just got to my support level. And then you want to wait for confirmation. Confirmation is simply when you see volume coming in. So volume is increasing, volume is increasing, it keeps increasing, and people start buying it back up. That is when you want to enter, because you know now for a fact that this is support, and it's confirmed. You want to enter right over there. Then the stock goes up, you make your little 10% gain, 20% gain, whatever it is, you sell, and you repeat every single day. That's the whole idea. So let's look at it for this stock, right? This is the same stock from the previous picture, like this one over here, same one over here. I have the same support, and all I'm doing is I'm just waiting for market to open, and I'm waiting for it to get close to my support. That's all I'm doing. So market opens, the stock goes up, then it goes down a bit, then it goes up a bit, then it goes down. And when it goes down and it touches my support right over there, and I see people buying it up, I see volume coming in, that's when I buy. And I buy right around about this level over there. That's when I buy. This is what I do. So the stock confirms support, right? Volume came in, that's when I buy. That's how simple it is. I didn't buy when it was all the way up at pre-market high I didn't do any of that stuff. Buying at pre-market high is very risky, right? We're using logic over here. We're buying at a point where historically we've seen, as you can clearly see over here, where historically, anytime the price hits this level from above, it gets instantly bought back up, it goes up. So we're just buying at a point which historically works, and we're betting that it's going to happen again. That's all we're doing. That's it. So let's move on to the next step. So now we're inside the trade, right? We bought the stock. What do we do next? The next thing to obviously do is to sell. Now there's a couple of reasons why we would sell. The first reason could be VWAP. The second could be a pre-market high, and the third could be $half whole dollar resistance. Now, if we go back to the stock, let's assume I'm just going to draw a VWAP, right? So let me clear the board first, and then I'll draw some VWAP. So I'm going to draw a line over here, and we're just going to call it VWAP. You can add this indicator onto your chart, but I don't have it on the chart, so I'm just assuming this is a VWAP. The first reason I would exit was because when I bought over here, right, the entry is still the same. The reason I'd exit is if the stock hit VWAP and it found resistance. So let's say the stock, let's keep continuing this line. Let's say the stock went up and up and up and up, and let's say it hit this point over here. And let's say when it hits VWAP, it finds resistance, right? Let's say it goes down a little bit. It tries going back up, finds resistance again, goes down. It tries going up, finds resistance, and it goes back down. This is clear to me, crystal clear that it's finding resistance on VWAP. So that is exactly what I'm going to sell. And this difference right over here is my profit. That is the first reason I'd sell. Now the second reason that I would sell is called the pre-market high. So you can see right over here, this is the highest point that the stock ever went pre-market, right? This point over here, like you can call it like $1.48, 47. The idea is when I buy the stock right over here, I'm going to wait for the stock to go up, up and up and up. And when it hits the pre-market high, which is the level over here, I'm going to sell. And again, this difference would be my profit. That's the second reason to exit. Now the third reason to exit would be the $0.5 hold dollar resistance. So you can see over here that the price, when I entered, let's call it $1.22, right over here, right? So let's say I entered at $1.22. The next point of resistance that will probably happen to the stock will be the next $0.5. So the next $0.5 jump would be at $1.50 right over here. So again, same idea. We'll draw a line at $1.50 and we say, okay, stock goes up, 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 hits $1.50. I can see that there's resistance, resistance, resistance. That's exactly when I sell. And again, this difference is my profit. Those are the three most common reasons that I sell. And the last thing I'll mention just as we're here is to keep your losses super small. I keep my losses tiny. I keep my losses like 5, 6, 7% maximum. So let's say, right, let's use the same example. Stock's going up, whatever, market opens at this level. We wait for the stock to get near our resistance point. We enter, and let's say for whatever reason, it doesn't go up, right? Let's say that this support point wasn't strong enough. Let's say that the news catalyst wasn't good enough, whatever. And let's say the stock goes up a little bit and then it goes down. I am not gonna hold this if I'm down like 20%. I'm never gonna hold this down while I'm down 20%. Never. The maximum I'll lose is gonna be 7% max. I keep my losses tiny. Most of my losses never get to 7%. They get to maybe 4%. I realize, you know what, this stock has like no potential. Let's just sell. And I sell for like a minus 4% gain. That's it. So keep your wins as big as possible. Like if you can, like 20%, 15%, 10%, whatever, and keep your losses as small as possible. That is how you grow your account successfully. So I mentioned how those are my most common exits. But some days, like this one in particular, I didn't really get to use any of the things. I didn't get to use VWAP because VWAP, you can see over here, it was all the way down here. I didn't get to use pre-market high because it never got to pre-market high. I didn't get to use the $0.5 hold dollar because it never got to $0.5, right? So you always have to be dynamic with your trading. And in this case, what actually happened was this. I bought over here. The stock went down for a little bit. Again, my stop loss is still set at like 5%, which would be down over here. It bounced back up perfectly off the support level. Perfectly. And this just goes to show you how solid this strategy is. It kept going up and up and up. And it actually went up so fast that it had to be halted, right? Halts are this. Halts is pretty much like the stock market stopping trading because it's moving way too fast, right? So they're literally going to ban trading on the stock for like 5 to 10 minutes. It's usually between 5 to 10 minutes because of how fast it's moving. So you can see it halted over here. 5 minutes later, it resumed trading all the way down over here. Halts are very volatile, very risky. We see them all the time with gappers. And I had to exit all the way down over here, right? Now again, if this kept going up, if it didn't halt, it would go up and up and up. It would reach pre-market high or $1.50. I would sell right there. Boom. My profit is all the way from here to here. Simple, right? But because it halted, I didn't get the chance to sell it over here. I had to sell as soon as it unhalted. So that was the case with this specific trade. Most trades I sell at VWAP or the pre-market high or the $1.50. But this is just a specific example of when I didn't. So now I'm going to quickly go through a real trade that I use using the same strategy where I made 2,687. I'll explain my entries, my exits, exactly everything A to Z. Let's begin. So this is the stock that I was talking about. You can see over here, it started gapping up pre-market. News came out over here and I've identified the support level. Very simple. Market is about to open. So I'm in replay mode. So I'm going to play it candle by candle so you can think of my thought process. So the first candle opens, didn't get near my support. It did not get near my support. It went up. I'm not going to chase this stock because that's exactly what I do when I was a beginner. As a beginner, I'd be like, wow, it's going up, let me just buy, right? And then I would lose a bunch of money, right? So I'm not going to be doing that. I'm not going to FOMO into trades. I'm going to wait patiently, and this does take patience, for the stock to get down nearer my support level. Let's see what happens in the next candle. Next candle opens, and we can see that it goes down a little bit. Still not super close to my support, but now we're starting to see that there's some weakness from the top, and it's depending on the lower levels. It's like, okay, well, let's see what happens on the next candle. The next candle, you can see it touches my support level almost perfectly, and then you can see it starts being bought back up. So the candle went as low as my support level and then got bought back up, and you can see volume has also increased from the previous candle. This is perfect. For me, this is good enough. That's exactly when I enter. The next few candles, the stock goes down and down and down, but eventually it starts going higher, right? It goes higher one last time, and this is when the stock halts. And when it eventually opens, I have to sell right about over here for a 6% gain. That's it. And how long was the trade? It was 1, 2, 3, 4, 5 minutes long. So it took me 5 minutes to make the trade, and I was in and out, made $2,000. That was it. And this is the strategy that I repeat in the community every single day. This is how I make a living. So this trade was made in the Draco-room. You can see I told people the exact support that I entered. I told people the exact stock that I'm going to be trading, and I recorded my screen while I was trading it, in and out, all of my entries, exits. It's all in there, as well as all of my other trades that I made and all the other live trades that I made. It's all inside the Draco-room. Let me show you inside the Draco-room. So this is my community, the Draco-room. You can see inside there's a wins channel. We can see today, Freddie made some profit on the stock. Johnny made $400. He made some money over there, entered over there, sold over there. He made $500. He made 8%. Ashley made $428. Mike made $734. Taz made $903. Dave made $282. And you can see people make wins like every single day. Every single day we use the strategy, and you can see how many wins people make. It's absolutely insane. You also get access to my watch list channel. So you can see I tell people the exact stock I'm going to be trading, the exact support level, and if I have any other notes. So you can say today I said I'm going to be trading this stock, the ticker. I said the support I'm going to be looking for, and I said that I'm going to be waiting the first minute. I'm going to wait out the first minute. And I do this every single day. You can see all the dates. It goes back months. Like, I do this every single day for all the community. Inside the community, you also get access to a course. There's a full course inside. There's an FAQ section. There's a chat section. You can chat with all the people there. There is a trade review section, a live review section. There's day reviews, month reviews. There's so much in there. You should definitely go check it out. When you join the Draco-room, you also get access to all of my trade reviews and my live reviews. So you can see today I made $8,000 on this stock, and I show you my entry, my exit. I show you everything. I analyze all the other gappers. All of these videos are over here. All of them, right? So you can see on this live trade, I made $3,000. I literally show you in real time my entry, my exit, everything. All of these videos, they're all over here. They go back months. It's super useful. So if you guys do want to join the Draco-room, email me at this email right over here right now to join. I am going to be closing the group kind of soon to just focus on the people inside. So if you do want to join, this would be a great opportunity. Email me at the email right over here, and I'll try to get you a spot inside. If you guys want to watch a video where I explain the boring trading strategy that's made me over $1.5 million, click the video that just popped up. And as always, guys, subscribe, like, comment, do all that good stuff for the YouTube algorithm. I'll see you guys in the next video. Peace.